Good evening, all. Ira Epstein, and here we are on Tuesday, the 31st of January, 2023, getting ready for the FOMC announcement at 1 o'clock tomorrow Central Time, followed shortly after by the press conference. I want you to remember that you got to start thinking the super core word that Fed Chair Powell came up with in his last speech. He's saying that he's looking at an index, X energy, that is service-based to see if labor costs can come under control and what the Fed is doing about it. And the reason he brought that up is the Fed seems to be on the track of thought that that part of inflation has switched to the service industry away from the manufacturing industry. You know, what we keep seeing is everybody keeps laying people off. I don't care what company, every time you turn around, 5,000 people, 7,000, 10,000 gone. They're getting picked up, but a lot of them are getting picked up in different companies, service, and so on. So they're looking to see what that means. Now remember, service can be your barber. Service can be the person waiting on you in a restaurant, a manicure. I can go on and on. These are your service people. I would even call a doctor a service industry, okay? That's what you're looking for. What is that doing? Now, we saw the labor costs come out today, and in the categories that matter, we're seeing a wobble. They did slip. That sent the stock market indices sharply higher, and a lot of the individual stocks came roaring back today. Now, what is the Fed chair going to do tomorrow? The common and most analysts think that he will go with a 25 basis point hike. 50 will spook the market. Because it's not baked in. 25 is baked in. He'll say he's data dependent. He will say that they see some progress, but they're not there at this point in time. They need more and more data. He will not allude that he's ready to stall on raising interest rates. When asked why he didn't go 50, if he's asked that instead of 25 tomorrow, it'll be because they want to see the impact. They're starting to see things, but is it going to stick? Is it going to keep falling? They want to find out what they're doing. That's where I think you're going to go tomorrow. We'll see if I'm right. Then you have also the European Central Bank on Thursday. You've got the Bank of England. We have ADP numbers, I think, tomorrow. We got unemployment claims coming out on Thursday. And then Friday, we have the non-farms payroll. This is a huge, huge, big week. So if you're trying to be a hero, God bless you. It's a difficult market to trade because you're going to get this throughout the week. So when we come to SPY, the chart action looks to me pretty good. You've got higher lows, higher highs. It's bullish. You can see the resistance you're in. You're bucking up right now against this 406 area. It is where, and it's right here. You can see how that area has been a lot of problem for the market. Let's call it 410. That's how the chart is. It's $4, 410, 420. You see how that's working? So that's where I think you're at. When we take a look further, you can see you had a bullish crossover. The 18-day average got over the gray. When did that occur? So if we step back, when did it occur? Here's the close of business Friday. It wasn't there. Yesterday, we got the 18-day over that, and the market, did I do that wrong? I did. And the market makes its move to the upside. Wouldn't be surprised if you go for that 408.16, but you got exactly what I look for, a thrust to the upside developing. You've got resistance that I think is formidable at the 410 area. You got the Bollinger Band waiting for you there. And it was an interesting day because if you look at the close of business yesterday, you had a 78.30 level. When you lose the embedded reading under 79, I tell traders to evacuate their position. The odds favor that it's going to go back down here unless it re-embeds the very next day. And typically that re-embedding happens in the early trade, not late like today. Today was unusual. It re-embedded. So this turned out to be a bear trap, and that's why you're up here. Now, if you lose the embedded reading again under 79, generally if you get them back to back like that, my experience has been bearish. Then the market goes down for some of the key numbers. When I look at LIT, while you're dropping back, you haven't lost the embedded reading, but I hate the idea of traders coming in with fresh money and buying into the first time you hit a 200-day average and a Bollinger Band together. I'd rather not be involved. I let other guys want to own it because my experience, that's all it's based on, is it doesn't hold. You get a better spot to come in that's lower than that area. Same thing in Apple. You're not going to get me rushing up here to buy it into the 200 and the Bollinger Band. You can own it. I don't want to. Am I bearish? Absolutely not. But here's what I've learned in my 50 years of doing this. You don't have to be involved in every play. You pick your shots. All right? And if something about the trade, and you have to be able to identify that something. I don't want to hear from anybody. You know, my gut instinct. Gut instincts are useless. They're inevitably wrong. Okay? I know you're going to tell me yours are great. Okay. The world's lined up with that. But when you start putting things you can have a quantitative basis on and you look at it and you go back and study it, that's a heck of a lot better than what your stomach felt. In AMC, as I told you, we have corrected down to now where it has to make some decisions. The 18-day average is the savior area. It's where you run where the shells stop from North and South Korea, or in this case, I guess, Russia and Ukraine, and you're in a safe zone. No shells are going to hit you against that as the market tries to figure out, okay, I'm going to come out of that safe hut. Now what do I do? Is it going to go bearish again? Is it going to go bullish here? Don't know. You're down to where it has to make that decision. In this chart, it was very interesting in the financials. I wish today looking at this going, wow, and I'll show you why. You come in, and we'll go back to this right where it begins, all right? Not here. So this was last Wednesday. First day that you get up, both numbers are over 80. Okay, that's good. The second day, Friday, both over 80. Now they're embedded on yesterday on the break. So today would have been the day to be a buyer. I don't like trading into the Fed. And I told all my subscribers that. And today, as it turns out, let me get to where the action is. You drop down first, and then you had the big reversal. The objective is the Bollinger Band. You're embedded. Until it loses it, it's still very bullish. So I'm surprised at how good it got. And by the way, if you don't know how to work with Bollinger Bands, please, please, please learn. That and this momentum, the slow stochastic together, are key. Now, my slow stochastics will not match yours on your chart. When you take my course or you're a subscriber, I give you the formula for you to go in and adjust what you have to do. Remember, at any point you can click the top of this and it'll take you right into the course area that we have so you can see all about that. In stocks, okay, you tried to lose the embedded reading, but it too got saved at the end of the day. If you're not sharply higher tomorrow, the odds favor you're going to lose your embedded reading. So this is now getting, that's just experience. If you were to be steady, the way the math works, you're probably going to lose it. So be careful. Now, home builders, I am surprised, aren't you? I don't care if it's Pulte, Toll Brothers, you're looking at all of them. And they're doing really well. The market we keep hearing is no good. Home prices are coming down. Mortgages are unattainable, and these guys are making money. What is it? The ITB, isn't that the other one? I'm going to start looking at that ETF as well. That's another way to look at them. That's very interesting. You're over the upper Bollinger Band. Did you ever get the embedded reading? Well, we have both numbers today over 80. They were both over 80 yesterday. What do you think they were on Friday when you're that close? They were over it. In fact, that was the first time. Friday, Monday, Tuesday. So they're embedded for tomorrow. Would I tell a trader to go in above a Bollinger Band? Isn't going to happen. On a hard break, if it stays embedded, I'm very interested on the long side, but not up there. That's what I teach. XLE, you have a higher high, lower and low pattern. I don't see anything yet there. GLD, you lost the embedded reading. Come on. No. When you lose that, unless it gains it back, and it can't do it, it's more than one day now, as you're going to see here. Here's the first day you lost it was yesterday. How come the day before? See that? That number is 74 and you didn't get it back. Okay. So what it tells me now is the odds are strong that you're not going to get up through this number before you first hit wherever the 18-day average comes in. Doesn't mean it has to work. It's a high probability in my mind. Silver's real interesting. I hate that it's caught in the sideways action, but if it gets over 2182, it's sort of screaming at you. If it can close there, I want to go a bit higher, maybe to the upper band. This is a super important area. Is it a base to move higher or a top forming? That's what we're going to find out. My instincts, of course, when looking at the weekly chart, it's a base getting ready for another move to the upside, just like copper. This was your correction. You lost the embedded reading. You got down to the 18-day average magically, and you held it. You got to admit, it's magic, right? TLT. You're just drifting. Why would anybody want to go into this? BND, EFA, I think you stay away temporarily. And I don't like how the Bollinger Bands are narrowing in. It's almost as though the market is deciding that tomorrow's going to be that quarter point and we don't have to do a darn thing. And you're going to drift sideways in some of these markets for a while. My feeling with that is that, do I ever trade or tell my customers to trade my feelings? Never. Are they generally right? Probably not. Okay, I'm no different than everybody else. UUP, what was this? A bear market rally that culminated in hitting the 18-day average and running out of momentum today. We haven't quite finished the break in FXE. It could drop down to the 18-day average. To prove it's not going to, it's got to go up through the recent highs that we've made in this market. I think the smart money's out of it for the time being. So you put it all together. You got to get yourself into how you want to be. I hate going into those reports. I understand investors go into them, but traders don't have to. And you wait for the sharp reactions, up, down, whatever, and then you're picking up the pieces afterwards, which is the way that I like to approach the market. Again, you want to learn those Bollinger Bands, you can click anytime up here. It'll take you right there. I'm Ira Epstein. You have a good day.